Let's get a commodities check because U.S. crude oil falling nearly 4% in today's trading, reacting to Saudi Arabia slashing prices. The move renewing worries that the market is oversupplied as demand is weakening. It comes amid record U.S. crude production and softening demand in China. Now, what I find interesting about this today, too, Josh, is that one analyst said this is either a demand concern for Saudi Aramco or it's a move to gain market share. And both of those things are bearish indicators for energy prices. And this is also amid a lot of volatility in the space. The market seemed to have kind of bounced back, digested at least some of the geopolitical risks in the Red Sea last week, and then hit with this news from the Saudis this morning, just bringing back down the energy market. Some really bad performance across the board there, particularly when it comes to crude. Crude futures after the close today down just about, I think that says 3.5% after the close. So that's likely to continue into tomorrow as well.
Yeah, and just looking at the oil majors here too, Madison. So Exxon was down in today's trade, so was Chevron. And as you mentioned, oil prices actually climbed last week, and that was on these continued worries, as you mentioned, about kind of conflict in the Middle East, the Israel-Hamas war. But there were two issues today. One, the Saudi news, which is kind of just encouraging these concerns about lackluster demand. And then we also did have reports that maybe some shipping companies would be making a deal with these Iran-backed Houthi militants to get their ships through the Red Sea. Some back and forth headlines I was seeing on that front too. So that news was also being highlighted as pressuring prices as well. Broadly, by the way, we have seen analysts cutting their oil price forecasts for the year. General idea being here, these supplies coming from outside OPEC will be enough to meet growth in demand. Bloomberg actually had a nice write-up on this, knowing that among the 5 big Wall Street banks, only Bank of America, they pointed out, anticipates significant gains this year, forecasting an average of 90 a barrel. Citi, the most bearish, they said, predicting an average of about 75 a barrel.
And that's a big deal when you consider that there are some other names in there. I'm thinking about a JP Morgan, for example, that's usually pretty bullish when it comes to oil. And even they are moving their price targets down after some of this news. Also want to mention a survey from this morning showing that oil production last month by members of OPEC had also declined, or had also risen rather. So that's going to increase supply in the space, which is not good when you're seeing some weakening demand. That's also going to drive down some of the trade that we're seeing today when it comes to oil prices.